VA stand for, everybody?
Veterans Administration.
Very close.
Hmm?
Veteran Affairs.
Oh, Veteran Affairs.
Yes, very close. Yeah, that's Veteran Affairs. So this is the loan. This kind of loan is guaranteed by the federal government. Okay, so government say, I want to help the people who work for military, who serve the country, because they serve the country. They deserve to own their own home without zero down payment. That's the only loan that allows no down payment. And not only that, remember when we do conventional loan, whoever have less than 20% down, what do they have to pay beside their mortgage?
Mortgage insurance.
Mortgage insurance. Very good job, Josh. Mortgage insurance. But federal governments give the veteran a break. You don't even have to pay mortgage insurance, even though you have no down payment. Is this an awesome loan or what?
Yeah.
It's the best loan. Why don't we sell the best loan? Right?
Yep.
Okay. And not only that, they have a very low interest rate compared to conventional loan. The government, the federal government, give the veterans a very good chance to own their own home because they serve our country. They deserve it. All right? And not only that, when lender who lend the money to the veterans, they give the veteran very easy guideline. It can be very flexible in credits. For conventional loan, normally you have to have minimum of 620 FICO score, and some even 680. But for veteran, they can do the loan with 580 FICO score. So the government is really giving the veterans a very good loan, very easy to get. And even in the credit report, it might show a lot of debts, liens that the veteran couldn't, didn't pay in the past. They're also easy on that, but it case by case. So we don't know until we see the thing. All right. Who is the lender that lend VA loan? The lender does get approved by the Veteran Affairs, the Department of Veteran Affairs. Most of the lenders are approved. So they lend the veteran the loan that the government guarantee them. Reading the last one, Andre, read the last one for me.
The federal government provides financial guarantees on VA loans. Guarantees in the form of insurance, which pays 25% of the loan to the lender if the veteran defaults on the loan.
Okay, what does it mean? So, for example, United Wholesale lend a veteran a loan, and the veteran get the loan with zero down payment. And if the veteran defaults on the loan, couldn't make the payment, whatever happened, the federal government will pay 25% of the loan amount to the lender, to the United Wholesale lender. So from the angle that of the lender, the loan is not that risky. It's not really zero down. It has 25% guarantee on it. It's the same as the conventional loan with 25% down. Do you agree with me?
Yeah.
That's why the lender is also easy on lending this money, because I have 25% back, guaranteed by the Veteran Affairs. See that? So this is a very good loan. In the future, if you happen to be a listing agent and there is an offer from a VA, I want you to consider them. Give them a chance. Do not, because they have low down payment or zero down payment and you don't give them a chance, do not do that to them. Give them a chance, because VA loan is a good loan. It's easy to get qualified than the conventional loan. So give them a chance and bring them to the office. Tell them, I have a VA loan here. If you want to do it, we get it done for you. Okay? It's a very good loan, good buyer. So give them a chance to get a home. Any question before we go on to the next slide? No questions.
Hey,
So-
Michelle, can I have a question?
Of course.
Yeah, with the current competitive market, it's hard for the VA loan to get accepted by the seller. So, is it possible to just go with the regular loan, conventional loan, and then refinance with VA later after purchase?
You decide what to do, but if your client cannot bring in any down payment, then you have to do VA loan, and in that case, the agent duty is to talk to the listing agent about how awesome VA loan is. My VA, VA loan is very easy to do, and I don't think there is any problem, even though it's zero down payment, but the government, the federal government back this loan for 25%, so it's the same at the 25% down payment. So our job is to educate the listing agent how awesome this loan is, and it will be closed at the same time at the conventional loan. It's not longer. So the listing agent might not know, but we need to educate them on how VA loan works so that we might get a chance. And if you think the listing agent doesn't understand what you say, then you can do whatever way you do with it. We can refinance later, yes.
We
Of course.
can do conventional conforming loan, and then we will refinance after that with VA loan, right?
Yes, you can do that. Yes.
Okay.
Why? Okay. So for this slide, we talk about who qualify for a VA loan. So and you read the first one, that's if the veteran served 90 consecutive days of active service during wartime. As I understand that we are all always in wartime. So whoever served in the military for 90 consecutive days and active, they are qualified for a VA loan. Okay? Or somebody served in the National Guard or the Reserve, they just serve in there. It requires 6 years of service. It's a longer time because they serve. I don't think they're really working, right?
I think once a weekend, like once a month on the weekends.
So it's different from the one yeah. So that's why it take a longer time, right? So you tell me a little bit about people who serve with
The
National Guard.
reserves, so the National Guard, I think, is like stays in America, and they're not like, they don't go fight. I'm pretty sure that they like take care of affairs out here. Like I think it's more like border patrol, stuff like that with the National Guard. Or no, and then the reserves, I think, is just like that you go once on the weekends every month, and then you like help out. I don't know exactly what they do, but they just help out every weekend.
Awesome. So I hope everybody heard what Josh has said. Very helpful. Thank you. So that's why, because they don't do it much, so that's why it requires a lot of time of services. Okay. The third item is you are the surviving spouse of a veteran who died while in service or from a service-connected disability, and you have not remarried. So if someone who husband or whose spouse was a veteran and died while in service, get qualified for the VA loan as well. This is just definition. This is just definition. Or spouse or service members missing in action or prisoners of war are also eligible. So this is definition, and it's very easy to understand, right? Do you understand it, right? You may still qualify even if you don't meet the length of service requirements in some cases, such as being discharged. So in the past, I worked with people who got discharged from military, and they got qualified for a VA loan too. All right. Any question? Because this is just definition, and then I will send out this slide so you have it so you know who qualify for it. Okay? How to apply for a VA loan? Of course, anybody apply for a VA loan will go to a wholesale broker like us. They go to us, okay? And normally a VA loan, the only thing the VA loan different from the conventional loan is they have one extra thing. It's a COE, it's a certificate of eligibility. So this certification just showing that they are qualified for a VA loan from the Veteran Affairs. It just meet one of the requirements that we in the previous slide.
So they apply through the VA, or they apply through you?
They apply to us,
Okay,
and
and
we
then you
will
give them.
we will fill out a form. There is a website for us to fill out a form for them, and then nowadays really easy. Before it's harder. Nowadays we just fill it out and submit it to our lender. Our lender will give us the COE. It's much easier now. They don't have to go anywhere. They just go to one place and we get it done for them.
Is there a cost for that?
Huh?
Is there a cost for the
I don't
COE?
think there's a cost. I don't think so. I don't hear anything about that. But good question. But so it is not harder. I put here, so see, there's a link. You see there's a link there? If you want to see it, you just go see it, you know, or if you want to help your client to fill out the form, that's fine too, okay? So on this side right here, it's the document that require for different type of, you know, like different status of each veterans. So, because I don't know much about anything VA veterans, their status. So to me, if I see my client, I will ask them to go through this table with me and tell me which status he or she belong to, because I don't okay. So like the first one is for people who get discharged. See that? So people who get discharged, they're gonna provide me a DD form 214. So whoever bring you this form, so they are in the first one. You see that? You see? This is different status. We require different documents because I don't know which one they belong to. So I will show them this form and ask them, can you tell me which one do you think you are? Who are you? Like, who are you in this form? And then if they point into one, because they know exactly who they are, because they also have a definition somewhere here, and they will need to provide us, for example, somebody, let's say I'm a discharge reserve member who were never activated, then they will need to provide us this document. So whoever at the last, the last column, last row of the table will provide the document that required right next to it. This paper we need them to apply for the COE. So this table is important. So in our first meeting with our VA, we'll ask them who they are so that we can request a document that we need to apply a COE for them. Is it easy to follow? You got it, right? So everything is simple. It's just one more step, the COE. You might ask for one more document. Just find out who they are and then get the document we need. How do we qualify a VA loan? It's exactly the same thing as we do conventional loan. No different. We also have to put a credit report to see what is their credits, what is their credit history, how many trade lines do they have. We also have to see how much debts do they still have in their credit report. And we also have to do income calculation. This is a full doc loans. We have to collect all the documents we need so that we can qualify them for a loan. So a veteran have to qualify for a loan that they borrow. All right. So we have to ask for all the documents: 2-year tax return, 2-year W-2, 1-month bank 2-month bank statement, 2-month paycheck stub, copy of the paycheck stub. For us, we will do the loan for VA, the veteran that have the middle FICO score 620 and above. Because for lower credit score, they will do, the lender will do manual underwriting, and manual underwriting is really hard to get approval. Okay, so we are going to do VA loan this year. So our loan department will do VA loan for all of us. So all you need to do is just collect everything and give it to them. You need to know who they are so you can give them the correct document so they can apply the COE for your client. So when you meet your veteran, your clients, you just ask them who they are from that table. You don't just ask who are you. You give them the table and ask them to identify which one they are, and then ask them for the document that they supposed to provide to us. That's one more document. That's it. And for our loan department, what they do after they get all the document already, including the documents for the COE, they will go to the lender that we use. They fill out one form to apply for a COE. That's one more step they have to do before they submit the loan. Okay. All right, talking about VA loan limits. All right, is there loan limits on VA loan? No and yes. Why no and yes? It's a little bit hard. When we say no loan limits, this is really awesome. No loan limits for people who never applied for a VA loan before. They are qualified for the VA loan, but they never use it. Then they have no loan limits at all. What does it mean by no loan limits? As long as they qualify, if their income qualifies for a $2 million loan, they get the $2 million loan. Before 2020, the VA loan limit is the county loan limits, but that no longer apply. Now, VA loan, there's no limit if they are the first time using VA loan.
They just have to qualify for that.
They just have to qualify for that amount of loan.
I was gonna say, they can't just give everybody, a bunch of money and they don't qualify.
Exactly,
Okay.
they have to qualify.
Perfect.
They have to qualify for that loan, but there's no loan
They
limit.
can go up to $10 million if they wanted, if they qualify for
Exactly, because for example, if for people who live in Santa Clara County, the loan limit is $970,000. But what if, like nowadays, the home value is so high? If they need $1.5 million loan amount, or $1.2 million, or even $1 million loan amount, then if the loan limit is the county loan limit, they're not gonna be able to get the loan. Therefore, because that doesn't work anymore, there is no loan limit for VA loan for whoever gets the loan the first time. So we have to remember this. But for people who already have one loan, VA loan, and then they still have that VA loan, and they move to a different place to live because of work, because veterans, they move around. They have to buy another home in another place, so they use their VA loan the second time. In this case, there is a loan limit on it.
I have a question.
Yes.
So is it like a FHA loan where after 5 years, if you don't do it, you get to kind of get a new one?
Good question, but no. Okay, talking about VA loan and FHA loan, very good question. I think after we learn the VA loan, we're gonna go back to learn about FHA loan. People can have more than one VA loan or more than one FHA loan. There must be a reason. Let's get one example from our company. Anna, her husband is a veteran, right? That's
Yes,
her.
I am.
Yeah. So they bought a house in Texas using VA loan. But they moved here, California, and they will need to buy another house here in California. So because they already used VA loan once, and they still keep that VA loan there, they moved here, they rent that home out. That's fine. That's okay because they don't live it anymore. But when they move here, if they want to use the VA loan one more time, the home here has to be an owner-occupied VA loan, because VA loan is not for rental, not for non-owner. So if she buy an owner-occupied here in California, she can use VA loan one more time. But how much down payment she need to put in, or she don't need to put in any down payment? We will learn how to calculate that a little bit. So we will learn, oh, our client already have one VA loan, now they want another VA loan. Does he need to do any down payment, or he still qualify for a zero down payment? Is that possible? It is possible, but we need to do some calculation.
They don't have to get rid of the other one?
No.
Okay.
They can still keep that there. Unless they don't want to keep the VA loan, that they can refinance into conventional.
And then if they did that, would they come over here with the no?
They restore
down payment?
all their eligibility.
Okay.
If they refinance that house into conventional loan, or they sell it, they restore their eligibility completely. So they know for sure they have completely full amount of insurance. They can do another VA loan here, knowing for sure they don't have to bring in any down payment. You see it here, right? Good question, but yes, that's how it works.
And how many times is there a limit on how many times you could do that, or?
There is no limits until you run out. Okay, so what is that amount called? It's called VA entitlement. We talk about it a lot. So case, lender here. No loan limit with full entitlement, but county loan limits with leftover entitlement. So we're gonna learn what are they? What is entitlement? What is the leftover? Oh.
Yes,
So
what is entitlement?
Yeah, awesome. Good question. Can you read the first one for me, Sully?
VA loan entitlement. The amount that the Veteran Affairs will pay the lender in the event that a borrower defaults on his or her loan, and the mortgage lender has to make investors whole.
So, VA loan entitlements is the amount that the federal government will pay to the lender in any situation when the client default on the loan. If the veteran using the VA loan the first time, what is their full entitlement? It's 25% of the loan amount. Remember? 25% of the loan amount. That's called entitlement. If someone have a $1 million loan, and the first time they use the VA loan, what is their full entitlement amount?
250.
250. You got it. You see that? 25%. Do you get it? You got it, right?
Yeah.
All right. Can you read me the second one, Andres?
If a borrower defaults, a minimum of 25% of the loan amount is guaranteed by the federal government, assuming that the borrower has full entitlement.
That's when they have full entitlement. So, Alex, what is the full entitlement amount? The percentage in percentage. 25%.
25%.
Yeah, of the loan amount,
Mhm.
right? So, how do we calculate the remaining entitlement?
So if you have two of them, do they do 25 and 25?
No.
No.
You have to learn how to do the
12
entitlement.
and a half, 12 and a half?
Now let's learn how to do it. Don't go ahead. Don't jump too far. So, Alex, can you read me the first column?
VA loan entitlement. Maximum amount of the Veterans Affairs will repay lender if the borrower defaults on a loan. 36,000 or 25% of the loan amount. Basic level, 36,000 or secondary level, 25% of loan amount.
Thank you so much, Alex. So, why there is 36,000? Because VA loan was created a very, very, very long time ago. And at that point, the average house value is like $144,000. And 25% of
Average.
144,000 is 36,000.
Right.
So that's called the basic level. That before the entitlement is 36,000. That's 25% of the home value at that point. But because the home now is not 144,000, it's millions. So now we have the secondary level, and it is 25% of the loan amount.
So let me ask you, if your house, not here, but if your house is worth less somewhere else, less than 36,000, do they pay the full 36,000 then? Or they just 25%?
25%.
Oh, okay.
Okay. 6,000 or 25%. Okay. All right. The second column. Let somebody read it for me. Josh, you read the second column for me.
Full entitlement. If you never used a VA loan before, or if you did use it and you have your entitlement restored, or you sold the property, no loan limits, no down payment, no mortgage insurance.
So we explained this before, right? Alex?
Yes.
So if you use your VA loan the first time, you have full entitlement. Or you sold the property, the first VA loan, you sold it, then now you have full entitlement again. Or you refinance that first property from VA loan to conventional loan, now you have full entitlement again, right? Can you read the second paragraph?
You can borrow $2 million loan if your income qualifies for it with 0 down payment.
Is it understandable? So as long as the veteran qualify for the loan amount, they don't have to put any down payment if the loan amount is the same as the home value. If they buy a home at $2 million and they qualify for $2 million, they don't have to bring in any down payment, right? And they have full entitlement. If they default, how much the government will pay for the lender?
25%.
Of $2 million.
Oh, 500,000.
500,000.
Yeah.
That's a lot, right? Now you're all expert. You know, when you go out now, you can talk about VA entitlement. You know what? If you understand this, you can go online. You talk about, I know if you need me to help you with calculating your VA entitlement, call me. You get a bunch of clients. Because they don't know. We're going to learn how to do it, okay? Alex, can you read me the last column?
Partial entitlement. You can have more than one VA loans as long as you have your entitlement remaining. Count the loan limits when you have more than one VA loan.
Okay. So meaning the first one saying you can have more than one VA loan as long as you have your remaining entitlement. If you run out of entitlement, you have no more VA loan. But in order for you to restore VA entitlement, how do you do that? There are two ways. Sell the house or refinance. You got it.
Refinance to a conventional.
Yes.
Okay.
So when you meet your client, you give them option. Hey, you want to restore your VA loan entitlement in order for you to use all that for your owner occupied home that you're buying, or you want to just use the remaining. You should do that. Be an advisor. Don't just tell me what you want to do. You tell your client what's best for them. If they bought that house too low of the price over there, don't use the entitlement because they're gonna buy a house a lot expensive here. Let refinance to a conventional so they can have the full amount of entitlement, so you don't have to bring in any down payment, because the down payment here may be a lot, like 500,000. They don't have money. If they have full entitlement, they don't have to bring in any down payment. You have to look at the picture. Oh, you have a VA loan here. If you keep it, you don't do anything about it, you might need to bring in down payment here, and the down payment here is a lot, and I don't see you have enough money for the down payment. Why don't you refinance that one conventional to restore all your entitlement, so you don't have to do any down payment over here? That's a loan agent supposed to do, right? You're supposed to advise your client what to do. And whenever there is, because if they use some of their entitlement, there is the loan limit applied. And the loan limit at the county, right, that they're using. And how do we calculate that? We're gonna go to the next slide. This is the formula. It's just a little bit hard to go through. We're gonna do the example, we're gonna do the real calculation. I want everybody here to learn how to do the calculation. I'm gonna go over the example so it's easier. There are 3 calculations that we have to do to calculate the partial entitlement. Okay, we're gonna do example number 1. Okay, this is it's very easy. You just plug in the number. That's all. But you need to know the formula to plug in the number. So the first one, can you read me the on the side right here? Entries.
Yeah. The borrower already used 36,000 entitlement in his previous home. Now he wants to buy another home with 200K loan amount. The conforming loan limit in his county is 500,000.
Okay. So there are three formula. So we're gonna plug in number. So the first formula say loan amount times 25% equal to maximum guarantee A. And so you have the loan amount of the loan amount here, the new loan amount that he applying for. In this case, how much, Josh?
He's applying for
200,000 loan amount. You see that? So 200,000 times 25% equal to 50,000. That's the first guarantee amount. It's called guarantee amount A. Okay, let's move to formula 2. Formula 2 say the county loan limit times 25%. So the county loan limit in this scenario is how much, Josh?
500,000.
500,000. So 500,000 times 25%, how much, Alex?
36,000.
36? No.
What?
125.
125,000?
No, 500,000 times 25,000.
36.
No, it's not 36.
No, it's 125,000. 500,000 times
Oh,
0.25.
yeah.
Yeah. The 36,000 on the side, I think is
Okay, the 36,000
the
here
entitlement
is the entitlement use. Remember? The second formula is the county loan limit times 25% minus the entitlement used. Remember? Over here it said the borrower already used 36,000 entitlements.
Okay.
So 500,000 times 25% minus entitlement use in the second formula. You see this? County
Okay.
loan limit times 25% minus entitlement use. So when we take the 500,000 loan limit times 25% minus 36,000 entitlement already used, we have the guarantee amount B.
89,000.
So the guarantee amount A is $50,000. The guarantee amount B is $89,000. Whichever lower that we need to use for the next formula. So we're gonna use 50,000 as our final maximum guarantee. So the lower number from formula A, 1 and 2 will be used as final maximum guarantee. You see in the third formula, you see final maximum guarantee? You see that?
Okay.
So you use 50,000 as our final maximum guarantee. You divide it by the loan amount, the new loan amount that we want. In this case, how much?
200,000.
200,000. When we use 50,000 divided by 200,000, the VA guarantee in this case is 25%. So when the third formula come up with 25%, meaning that this borrower still have 25% of VA guarantee, meaning they don't need to bring in down payment.
So if it's less, he needs to bring in money.
If it's less, then they have to bring in a down payment. We're gonna learn how to calculate the down payment, okay?
Okay.
You might not need to, if you know how to calculate all this is awesome. So you can sit there and do the magic in front of your client. They, whoa, they're gonna, but if you don't, you can go back to the loan department and tell them to do it for you. The mortgage team, send them the number. Hey, give it back to me in 5 minutes. I need the number to talk to my client. Hey, mortgage team, send to the mortgage team, text to one of them. Say, here is the entitlement used. Here is the loan amount that they need, and this is the county limit. Give me the, if they need to do any down payment. So they have to go all the three formula. They come up with the down payment. The down payment is gonna be after, later. So in this case, if the VA guarantee percentage is 25%, your client don't have to do any down payment. They can, so for this case, they buy a home at 200,000, they get a loan of 200,000. Awesome, right?
Assuming they're purchasing in California, where the 200,000 is not a realistic number.
No.
Assuming they're purchasing at, let's just say, the average outside of the Bay Area, 450.
Let's do the
How
next.
does the number
Let's do the
work
next
out?
one. Yeah, let's do the next one.
I was gonna say, I think it'll change your county loan limit though. So your loan limit's higher, so I think
Yeah.
you'll probably get,
Yeah.
Right.
it'll
Let-
probably be similar.
Look at the
Probably
next
not.
one. Okay, Alex, can you read me the next one? Read me this one.
Borrower already used 70,000 entitlement in his previous home.
So remember this number.
Now he wants to buy another home with 765 loan amount. The conforming limit in his county is 724,000.
Okay, thank you, Alex. So see, now the house value is 765,000, and he want to do zero down payment. So he want to borrow 765,000. This is much bigger, and he used 70,000 entitlement in the past, right? So we're gonna do the same. You need this three formula. You just plug in the number. All you need to do is to understand how to plug it in. So the first formula is the loan amount that he wants to apply for times 25%. That's the new loan amount that he wants times 25%. In this case, the new loan amount is 765,000. That's also the home value. Times 25%, it come out 191,250. So the first guarantee amount is 191,250. Formula number 2. Now we have to consider the county loan limit, because remember when the VA using the VA loan the first time in their life, they have full entitlement. We don't have to go through any of this formula because there is no loan limits and zero down payment no matter what. But because he used the VA loan once, now he have remaining entitlement. Because of the remaining entitlement, there is county loan limits involved. And now we have to know the county loan limits. In this case, what is the county loan limits, Alex?
724,000.
Yeah. So 724,000 times 25% minus the entitlement already used. You see that? So how much did they use entitlement, Josh?
70,000.
So now the county loan limit 724,000 times 25% minus entitlement use 70,000. Now we have the guarantee amount be of 111,000, right? Which one is the lower number in this Formula 1 and Formula 2?
Formula 2.
Formula 2, 111,000 is the low number, the less amount, right? So we're gonna use this less amount for the third formula, and it's called final maximum guarantee. So 111,000 divided by the new loan amount is 765,000. It equal to what?
14.5%.
14.5%, because it's lower than 25% of the VA guarantee. Therefore, the veteran has to do what?
Bring in 10.5%.
We don't know.
Oh.
We don't know yet.
Okay.
We only know that he has to bring in some down payment. But how much is the down payment? We don't know yet. We're gonna do the next slide. And by the way, the Veteran Affairs, they don't decide what is the down payment that the veteran has to bring in. They let the lender decide. The lender make their own decision on how much they want the client to bring in the down payment. Of course, the lender has to pick one method of doing that for all the VA loan. Okay? So in this case, the borrower has to bring in the down payment because the VA guarantee percentage is below 25%. Now we're gonna learn how to do the down payment. Okay? To me, the easiest way is to bring up the VA guarantee percentage into 25%. That normally that people do, right? So the difference, then we have to calculate the difference of to make it up to 25%. So that's the down payment. So okay, so this is how we do it. I want to do it on the board. It's easier to explain, but anyway, because people don't see my board, so let's do it here. In order to find out the amount that the VA had to bring in, the veteran had to bring in a down payment, we use the new loan amount times 25% minus the final guarantee amount. In the previous formula, the final guarantee amount is 111,000. You see it here?
Mm-hmm.
The 765,000 is the new loan amount times 25% minus 111,000. So the veteran had to bring in $80,250 to make the VA guarantee percentage up to 25%. Do I lost anyone here? Good, right? Sally, you got it, Sally?
I'm working on it.
Okay, because when we use 111,000 divided by 765, we get only 14.5 of the VA guarantee percentage. Let me show you the formula.
I understand the math.
You're gonna.
I understand the math.
No, I have to explain to you the math. So 765 divided by 25, 765, no, 111,000 divided by 765,000. And we get 14.5%.
Correct. I get
So
that.
this is completely math. Now, we want to know how much here we need to make it 25%. So this one now become X divided by 76 equal to 25% that we need. I came up with this math. So we want to find the X amount that make it up 25%. So the X amount will be equal to 25% times 765,000. So when we find X, and X will be the total amount. So we have to do X minus 111 to find out the 80,250. So this is completely math, but if you can just look at the number. Oh, thank you. Whatever. So this is completely math. Don't worry, the loan department is the way that they have to come up with a down payment number for you. You don't have to know about this, but I just want to explain how do I come up with it. So we have to find out the amount of the down payment to make up for 25%. I don't even want to go to the next paragraph because that's another way of calculate down payment. But because we have to define which one the lender gonna use. I pretty much think this is the way that we just talked about is how lender will decide how much the client has to bring in for the down payment.
I guess that's the part that loses me. I understand the math, that's not a problem. The math is very clear. But the portion where it says that the lenders can arbitrarily choose how to decide or what they wanna do, that's what loses me. Like where
Okay,
is
so I think let's forget about it. Just lender will make sure that the client have to have 25% VA guarantee amount percentage. So you don't have to think about it. So the formula we just work on is the 25% guarantee
so no matter
VA.
what, they need to come in with a 10.5%, which goes out to the 80,250. So they just do the difference and make it simple like that?
Yeah, something like that. Yeah.
It's
Make
like
it simple. Make it simple.
It's like $100 off, I think.
Yeah.
The 10.5% is like $100 off.
But why does it say between 20 and 25%?
Because we don't know which lender how much they ask for. But in this case, we use 25%
Okay.
to be conservative.
Okay. Thank you.
Thank you, Sally, for asking the questions. Okay, so now we're gonna do one more. We're gonna do one more. The first example, client don't have to bring any money for down payment. The second example, you have to bring in 80,000 down payment. Now the third example, we do the same thing. Just can you read the third one for me?
Borrower already used $161,000 entitlement in his previous home. He now wants to buy another home with $400,000 loan amount. The conforming loan limit in his county is $600,000.
Okay, awesome. So formula number one, we use the new loan amount times 25%. What is the new loan amount in this case?
100.
400,000. So 400,000 times 25% is 100,000. So the second formula is the county loan limit times 25% minus the entitlement use. So what is the county loan limit in this case?
600,000.
600,000 times 25% minus 161,000 entitlement use. So the guarantee amount B is a negative number. So whenever it's negative, what happened? The VA had no chance to use the VA loan.
He has to move to another county.
I don't know. But look like he used almost all
Yeah.
of it
He
entitled.
has to sell his first home.
He had this good job, yes. Either he refinance, I think he can refinance to conventional his first home if he can keep it, or if he wanna sell it, he sell it so he can restore his full entitlement.
So there's no limit as to how many times they can do a VA.
No limits on how many times. It's
Yeah,
just
money
get the entitlement amount.
So that's a huge thing to learn today, because up until now in all my years I've always thought the common misconception that you can only use it once. And
I
that's
thought
it.
the same thing.
And I have a lot of friends who are military, they're like, okay, I'm gonna wait for my one. And so they have conventional loans or what have you, but this is eye-opening, because there's no limit to how many times they can do it, is that right?
Exactly. As long as they have the entitlement, they can use it. You guys got it. You guys gotta talk about it. This is a good chance. First of all, VA loan, not many people are doing it, so they no competitor, right? Secondly, that the client not shopping around because they don't have many choices. They don't have many choices. Not many people know VA loan. Not many people are doing VA loan because they think it's too hard. If nobody willing to break it down for you like this, I don't think you ever want to touch it. I don't think anybody want to do VA loan because of all this math. Nobody like math.
Oh, everybody thinks you only get one. So why would you do it?
Everybody think you have only one time to get your VA loan. That is wrong. So you can help the VA to own more than one home, and that previous home can be an investment home. Is that right? Is that cool?
That's pretty cool.
Not only that, if somebody buying a fourplex, if a veteran buying a fourplex, he stay in one, that's still consider owner occupied, right?
Mhm.
And the other 3 units can be renting out, and we can use that rental income to qualify for this subject property. Even there is no tenant yet, we can use the potential rental income for qualifying the mortgage of the entire 4 units. So the VA, he not only have a home to live in, he have an investment of real estate. So you can go online and say, you know what, I can help VA veteran to have money to get a loan that can help him to own a home and can have an investment in real estate. Can you do that? Will people, wow, whoa, really, I can do that? They'll call you, how do we do that? Buy a duplex, triplex, or fourplex? That's how you do. You can help veteran to get a VA loan here at Pacific Life. And remember, if you have problem with calculating the down payment or the entitlement, go to the loan department. Or if you want to master it yourself so you look really professional, you look really awesome, do it. I will send this flyer out, this presentation out. You go back, plug in the number. This is really easy. The formula is so simple to follow. You just need to know which number to put in the formula. And then you're done. You have to interview your client though. You have to know. And normally the COE, the Certificate of Eligibility, will show you the entitlement use.
Wow. So if they haven't used it, it'll say 0. If they have, it'll
Actually,
say the amount.
if they used it, they haven't used it, it says 36,000. Sorry, that's different. If they already use it, it's 36,000. They haven't used it because the 36,000 entitlement is that created a long time ago. So when you see the COE, it says so 36,000. That means they never used it before.
Any other number they've used it?
If it's lower than 36, then they already used it, and then we have to find out what is their entitlement use. Okay. So when lower, can you read the last one for me?
When lower guarantee amount is negative, we don't need to do Formula 3 since the VA will not guarantee anything. This borrower does not qualify for any more VA loan.
Is it awesome? Any question, anyone? Any questions? You all expert now, right? So you can do VA loan now? How about the mortgage team? Are you expert now? So if Josh, Andre, Alex, Sully, and anyone here call you and ask for the entitlement number, and can you do it for them? Yes, awesome. And you can do the down payment for them too, right? Awesome.
I have a quick question. So when you want to transfer the VA loan to a new house and you need to refinance the first one to conventional loan, so customer need to make a down payment.
So can you ask me a question again? I'm sorry.
So at the beginning, they don't need to make a down payment for the first
For the
time.
first time.
But when they want to do the entire VA for the second house, so they
Okay.
need to put a certain amount of money to the first time.
They have to refinance that into conventional loan. Because they need to have the full entitlement to be able to not doing any down payment on their purchase, the new purchase. Good question. Yes. So they need two options. They can make the first option is they sell it, so they can restore their full entitlement, or they can refinance into conventional to restore their entitlement. Yes, Sally.
Given that we have 3 entities now involved in processing this type of loan, which would be our processing department, the lender and their underwriting, and then of course the VA, what's the turn time to close something like this? Because in today's market, at least for California, we're looking at, competing with fast close of escrow. So what's the typical time to close this?
30 days.
Number one, and number two, what are closing costs? Does it cost extra to do this? And
Oh, good question. We're gonna talk about cost next week. Because there are so many slides. Cause I can't finish them all. Look how many slides next we have.
Okay,
Okay,
perfect.
let's,
I just put it
You
on
see,
my.
you see this slide talking about money. Money they have to bring in for a VA loan.
I put it on my Instagram when we started the meeting, and I've got 5 questions from 5 different people on it. So
Ooh.
this is why I'm asking.
Oh, okay. So so I'm gonna go through this one with you very quickly. So, but we're gonna continue this next week. So you see, this one, there's a fee called funding fee when we do VA loan. Okay. So the funding fee when you do the VA loan, right? The down payment affects the amount of the funding fee you have to pay. And the first time use is different from the subsequent use. You see this? The down payment amount affect the percentage of the funding fee, and if they are using the loan the first time, it's the amount of the funding fee. If they use it the second time or third time, this is the amount of funding fee.
Okay. And these are funding fees obviously to the VA or funding
They
fees
pay to the
lender?
VA loan, to the VA department, the Department of Veteran Affairs. So, for example, someone has no down payment or 4.9% down payment, and they using the VA loan the first time, they have to pay 2.3% funding fee. But listen, the funding fee, the closing cost, or whatever can be financed.
Right.
They're coming with no money at all.
No money at all. But they need to know. When they ask a question, they need to know. They need to know how much they have to pay. If they have more down payment, the funding fee get less.
Do you know if the funding fee is tax deductible?
To me, everything that called closing costs is tax deductible. Yes, you gotta have to pay for it, right?
This is awesome.
Isn't it awesome? When I sit down and I learn about all this, I feel so excited. I said I have to do this. I have to show the whole entire world how to do VA loan because it is so fun to learn, and not many people know it.
Would it be okay to ask, hiding obviously the relevant information, the identity, but if you start processing one, would it be cool for you to have us watch it live as it's unfolding? Like for example, during the meetings, you can have the VA update, and so we know, until we have one that we're going through you, so that we can see it evolve from step 1 to
Good idea.
closing.
I would ask the processing team, so when they process their VA loan, if they encounter something they learn, they will update the entire company. Here, this is the VA loan that we're working on. Here's what happened, and here's how we solve it. Can we do that, team?
Yes.
Yes, because everybody want to learn. So when you work on VA loan, I hope we're gonna get in the VA loan very soon, that we start selling it. So right now I have 2 clients that want to do VA loan. So if we can get them a house, we can have the VA loan right away, so we can start learning. Because this is new to everyone, right? New to all of us. So when we learn something, we want to share with the entire company, so that everybody on the same page, everybody can sell VA loans, so we have more loans. Because right now, we don't have a lot of refinance anymore like before. Now most of the loan we have is refinance cash out, but people who need money then they cash out. They don't care about the rates or the purchase loan. We don't have refinance written term, or very rarely, because somebody still have 5% or 6% rate, then they do refinance rate term. But most of the time we do is purchase loan and cash out. So VA loan is so awesome. We're gonna talk about it next time more and more. So after we're done with the VA loan, when we know more about the VA loan, we're gonna go back and learn FHA loan. So and then after we learn FHA loan and VA loan, we're gonna have one section to compare why VA loan, why FHA loan, right? And why conventional loan. So we're gonna help give ourselves a lot of information we learn so that we can share to the world what we learn. And that's how you get new client. Okay? Any question before we end today's meeting? We're gonna continue VA loan next Tuesday. So what do you take away today? What is VA loan? Which one in the VA loan that you like most?
Let's see.
No, just what in your mind. It's just your
Oh, what about it?
What do you like most when you learn today?
Oh, just the fact that they don't have to have any down payment at all. It's easy for them.
Yeah.
You know?
And how about
also
you?
the percentage, like you said, for the first time use, you could use the loan for that too. You don't have to, it gets paid for as well. So
Awesome.
I think that's awesome.
How about you, Alex? What do you
I
like?
thought you can only have one BA.
Now you
Yeah,
see
well,
that they can do more than one
multiple,
VA.
yeah.
Yes. How about you? Anything you learned from today, Anna?
I think I can buy another house here.
That's another good
That's
one.
very
How
good,
about
Anna.
you, Sally? What?
I know a realtor, Anna.
Yeah.
I got you.
Ready to help you?
Yes. How about you, Sally? What's your takeaway today?
Same thing as Alex. That whole misconception of you can only do it once, and so I've been guilty of spreading that lie as well. So opening my eyes to it, and what I'm taking away from it is one more tool of value to the public.
It is really valuable. And who else would you like to serve? The veterans, right? We love to
Absolutely.
serve them, right? How about you? What's your takeaway today?
How to calculate their eligibility for a second loan.
Awesome. How about you, Như and Ian and John? What is your takeaway today?
More information about VA loan.
Awesome. Awesome, right? So we expect the processing team be the brain of the company to do the entitlement remaining and the down payment, okay? So get yourself ready. Whenever somebody asks you a question, just get it done like within 5 or 10 minutes. If you have all the information, of course, you have to have all the information. Otherwise you can't do it, right? So I hope we're gonna sell tons of VA loan this year. That's my goal too. I'm gonna sell VA loan. I'm gonna create my own video. I'm gonna teach people about VA loan. I'm gonna give it for free so I can get more loans. You can do the same.
And the good news is the closing costs can be financed.
Exactly. Yes, Sally.
How many banks are we qualified for VA?
We have you have UWM. We have Quicken Loan. The two biggest lender. They do VA loan. Do we have VA loan with Amwest? Amwest, we don't know, right? Maybe not. But
I can tell it's most of the banks
most
will
of them.
offer the VA loans.
Yes.
We just have not done with them yet.
Yes.
But most of the lenders they have a VA, FHA loans.
Yeah, and if we're processing it through here, we have,
Yes.
our options are Quicken
We
Loans
here.
and
We are processing loan right here. We do VA loan. Yes. Because it's not different. It just one more thing like the COE. That's it. And one not COE, just a form to fill out and send it in.
Perfect.
No different. Same at FHA loan. Same thing. Very easy. Never think VA loan is hard, because when we think it's hard, we can do it. We cannot sell it. Just think it's so easy. It's so awesome. And remember, as an agent, if you have to write an offer for a VA, a veteran, please educate the listing agent. I can get this done as soon as the conventional loan, and this is better than conventional loan. It's easier to get qualified. Yeah. You have to educate the listing agent. That's it. That's your job. Anyone online and on Zoom, you have any questions? No question. You expert. I know everybody expert. Anyway, so thank you so much for being here.
Muted.
They're
On
muted.
the top, I think it's muted.
Oh,
They
what?
might be
They
muted.
can unmute
Yeah, they have the
themselves.
ability to unmute themselves.
No, on the top, I
Right
think
here.
our screen, we can't hear them. I don't know,
Was the
maybe
TV
not. Yeah, maybe the TV's muted.
TV mute.
I think, and we can't hear
So
them.
if I don't think any.
I don't think
complain
anybody
about-
said anything.
Well, Jennifer was, we were talking
Yes,
to
you were
Jennifer
talking.
earlier.
Yeah, we were
yeah.
talking. Yeah. Okay. So we good. Thank you so much, everybody, for being here today for the training, and I'm excited to continue this next week.
Thank you.